Welcome back to my channel, ladies and gentlemen. So today's video, I'm going to be sharing with you a simple strategy that I used to generate over $2,000 in less than 5 hours. This strategy is very simple and it is not difficult to understand, and that is price action. Price action is one of the best strategies to trade the forex market, and I'm going to share with you a simple price action trading strategy that I use to generate over $2,000 in less than 5 hours. So ladies and gentlemen, before we start, I want to first and foremost introduce myself to you. My name is Austin Ikeru. You are welcome to my channel, Ostino FS. Don't forget to subscribe to my channel, turn on the notification icon to be the first to be notified whenever I publish new content, and also don't forget to share this video on your social media platform. So let's get straight into the video. So before you start, the first thing as a price action trader, the first thing you have to do is to analyze the market, because before you start trading the forex, you need to take out time to analyze the market so that you have a better entry and a better exit. So as a price action trader, there are certain rules that you need to follow. The number one rule is your money management strategy. You have to risk only 1% of your capital. Only 1% of your capital is what you are required to risk per trade. So when you have calculated your risk management, you are risking only 1% of your capital. Let's say, for instance, you have $1,000 in your capital. You have to risk only $10, making it 1%. So risk management is the number one thing that you should consider as a forex trader that trade based on price action. Then after considering the risk management aspect of it, then you have to look at your lot size, because it is your lot size that determines the risk that you are taking. So your lot size is very, very important. Like I said, 1% is very important. So before you start trading, the first thing that you need to do as a price action trader is to look at the market structure. So the first thing you need to do whenever you want to trade is to look at the market structure. So when we open the chart here, we can see the market clearly. This is a 4-hour time frame. You can see clearly this is a 4-hour time frame. So the first thing you need to do as a price action trader is to look at the market structure. Now, if you look clearly, what is the price action telling you? What is the price action telling you? The price action is telling you that the market is in a downtrend. So that is the price action here. The market is in a downtrend, right? Good. The market is in a downtrend. So what you have to do right now, after determining that the market is in a downtrend, you have looked at the price action, you have looked at the market structure, and you have discovered that the market is in a downtrend. Then the next thing you need to do is to map out your area of value, because after the price after the market structure, the next thing is your area of value. What is an area of value? An area of value is a place where marketers, where traders are looking at. It is an area of value that everyone is eyeing that level. In other words, we call it the support and resistance level, or you can call it the demand and supply zone. So after determining the market structure, the next thing you need to do is to look at the area of value. So when you discover them, you simply map it out. So you can use the horizontal line or the trend line. So now let's look at the area of value. We'll look at our trend line. Yes. Now, this is our area of value. You can see it. You just use your trend line and draw it. So this is our area of value. Remember, this is a 4-hour time frame. This is an area of value. We have used our trend line. So this is our area of value. So once you have map out the area of value with your trend line, you can also use the horizontal line to also map out your area of value. We have one here. This is the area of value. We have another one here, an area of value. We also have one here again. An area of value. Now, after mapping out your area of value, so what you have to do is to look at the market structure. First, we have identified the market structure, and now we know that the market is in a downtrend, right? Then after that, we now look at the area of value where price is not able to break out from, where marketers or traders are always looking at. So this is the area of value. So what you have to do is to wait for a directional move of the price to your area of value. After discovering the market structure, which tells you that the market is in a downtrend, the next action that you need to take is to look at your area of value. When you discover them, then you use either a trend line or you use a horizontal line to map out your area of value, which is very, very important. Some people make use of the moving average. You can also use the moving average as your area of value. So let's plot in the moving average. Let's change the settings. Let's use the lowest setting. Let's use 20 EMA because the market is in a strong downtrend. All right, let's change the color. Since our trend line is already black, let's change the color. Let's change this to, let's change the color to purple. All right, now the color, this purple color, is it red? I don't know. This red color is your 20 EMA. It also acts as an area of value. You can use it alongside with the trend line. So what do you do after discovering your area of value? The best thing you need to do is to wait for a directional move to your area of value, because as you can see right now, the market is clearly in a downtrend. So what you do is, after discovering that the market is in a downtrend, you look at your area of value. You have drawn it. This is the trend line. This trend line signifies an area of value. So what you are doing right now, you are waiting for price to come back and test your area of value so that you can trade in the direction of the trend. Because like I said, whenever a market is in a strong downtrend, you are expected to only trade in the direction of the trend. Now, this is what you do. As you can see, the market break the 20 EMA, which signifies that the market is in a downtrend, then came here and tested this trend line. After that, the market makes a downtrend. Now let's assume that maybe this is where you met the market, because everybody cannot watch the market the same time, right? So let's assume that you woke up and you saw the market in this place. This is where you saw the market, right? This is where you saw the market, and this is a support level. If you don't know, this place is a support level. This place now is a support level, and this is where you met the market. So when you understand market structure, you will know that this particular place is a support level, right? So you don't place a set trade here, because why? Whenever a market gets to a support level, the market will tend to reverse from there. It will either make a retracement before the trend continues. So if you place your set trade at a support level, definitely the market will make a reverse, a retracement from that place and hit your stop loss, and you'll be out of the game. So what you do is this: once you enter here and you discover that the market has reversed from here, remember that anywhere that the market reversed from tends to become a support level, because this is a downtrend and the market reversed from here. This place has automatically become a support level, because whenever the market gets to this, it will make a reaction either by making a retracement, right? And this is a 4-hour time frame, and you know that 4-hour time frame is a long time. So if you place a set trade here, definitely your stop loss will be hit. So what you do is this: you have to wait After identifying the market structure, which is a downtrend, and then you identify your area of value, which is this. You have used the horizontal line and the trend line and the moving average, the 20 EMA, to identify an area of value. So what you do right now is to wait for the market to make a retracement to your area of value. Now, when the market makes a retracement to your area of value, please do not take a sell trade immediately. The price touches your either the moving average or your trend line. Please take note. Don't take trade immediately the price touches the moving average or the trend line. There's another thing you need to wait. That is why, as a forex trader or as a price action trader, you need to have so many confluence before you execute your trade. So when the market gets to your area of value, you need to watch the reactions of the market. So the next thing you need to watch is the candlestick pattern. That is the next thing you need to watch. So when the market gets to the area of value, the next thing you need to watch is the candlestick pattern, the reaction of the candlestick. Now, if the candlestick comes to this area of value and then makes a rejection, which is bringing out a inverted hammer, that means that the market is unable to break past this area of value, which will not give you more confidence or more confidence that the market will go down. Or you can wait to see maybe a series of red candle which tells you that the market is going down. Like now, you can see that the market came to this area of value. This area of value, you can see this area of value. Now the market now makes a retracement, because normally the market was in a downtrend and then got to this area, made a retracement all the way to this trend line, right, with this long candle, and then reverse from this trend line and continue with the downtrend. So let's assume you got into the market here. This is where you saw the market. Please don't take a downtrend here. What you have to do is to wait for a directional move of the price to your area of value, which is this EMA or this moving this trend line or this EMA. Now you can see that the market couldn't even get to the trend line. Rather, the market reversed from the 20 EMA. So like I told you, you don't have to take trade immediately the market touches the 20 EMA. So what you have to do is you have to wait for some signals before you take your trade. Now you can see that the market got to the moving average and made this strong rejection. You can see this strong red candlestick, right? This strong bearish engulfing red candlestick. So this is the confluence that you are waiting for. So once you see this, it tells you that the price have rejected this area. So you have to place your sell trade here and then put your stop loss above the 20 EMA, because for the fact that the market has rejected this 20 EMA, I don't think the market can cross it. So you have to place your trade at the close of this candlestick, this red candlestick, right? You can see the rejection and it ended up in red, because if you watch, you will see that before the candlestick was green, this small green, and after that the candlestick now went up another green. When it got to this 20 EMA, it couldn't break past it. Rather, it made a rejection and then formed a red candle, causing a bearish engulfing pattern. This is what we call a bearish engulfing pattern, because the candlestick engulfed past almost 3 candlesticks to green. You can see it now. So this is a strong signal that the market is still going down. So what you have to do right now, you have to place your sell trade and then put your stop loss above the 20 EMA and then target your take profit somewhere here, 1 to 2 risk reward, because your stop loss can be 40 pips while your take profit can be 80 pips. Like I told you, as a forex trader, you need to work on your emotion. Don't be too greedy, because you may extend your take profit maybe to 200 pips and the market makes another retracement, and at the end it can be a reversal So it's very important that you work on your psychology, you work on your emotion. So you place your take profit here, so that once the market comes down, it will hit your take profit. Then if you want to enter again, you have to wait for another retracement. But based on how I trade my own, the way I do my own is this: I will place like 3 trades at this area of value. At the close of this candle, I will place like 3 trades. I will set 2 trades, a specific target, maybe 1 to 2 risk reward. Maybe I will set my take profit here on 2 trades, while I will leave the remaining one. So what I will do is this: once the market goes past maybe 40 pips, I will break even. What do I mean by break even? I will take my stop loss and place it on my entry, so that if the market comes back, it will hit my stop loss and without me losing anything. You understand? Then I will now relax myself and then perfect my entry. So let's assume right now that I entered my trade here, right, at this area of value. I entered my trade at this area of value, right? Now I entered the market and I saw the movement of the price, and I saw that this is an area of value, and I waited for a price to make a retracement. And now the price makes a retracement to the moving average and couldn't break past the moving average, and rather made this strong rejection. Then what do? I place 3 trades at this close of the red candle. So when I place 3 trades, I'll put 2 trades maybe on 80 pips take profit, because I'll do my calculation, and then I'll place my stop loss here. My stop loss can be 40 pips, while my take profit can be somewhere around here, 80 pips or 90 pips. Then one of the trade, I will just hold that one. Maybe I want to use that one to ride a trend. So what I will do right now is, once the market moves to my take profit, I will now bring the one that I was holding to break even. That is, I will take the stop loss and bring it to my entry. That is break even. So what I will do is, and my target is to know whether if I can be able to catch a strong move, because I see the market is in a downtrend. So let's assume that luck didn't favor me and the market makes another strong retracement and hit my stop loss. I did not lose. So what I will do now, I wait for the price to make another reaction, then I enter another trade. But if luckily for me, the price did not get to my stop loss, and then maybe just some few distance to get to my stop loss, and the price makes a reverse from there, that is my luck, because I'm going to ride the trend. No matter how long, I'm going to ride the trend. So this is how you trade price action. Very simple, very simple. So what you have to do is, you have to go to your demo account and study this thing that I've just taught you. Price action, very, very important. Let me repeat it again. First, what you have to do is to look at the market structure. The market structure, you zoom out your chart. Zoom out your chart and then look at the market structure. Now, let's assume this is where the market is. So you have discovered that the market is in a downtrend. After that, the next thing you have to do is to look for your area of value, which is the support and resistance level. Since the market is in a downtrend, we only look for resistance level. We are not looking at support, because we don't need support. What we're looking is resistance level, because definitely the market will break the support. So our target is resistance level. So what we'll do right now is, we map out this support, which we later turn into a resistance level, because whenever a price breaks past a support level, that support level tends to become a resistance level. Example, look at this. You can see that the market break past this support level, came here and tested it and continue. So automatically this support level has become a resistance level. So what we should be looking at is the resistance level, not the support. So when you enter the market, look at the market structure, which tells us that the market is in a downtrend, and what we have to do is we only trade in the direction of the downtrend. So we have to wait for the market to come to our area of value. So what we do is we plot in our trend line, which is this, and map out the highs of the downtrend. Or we can use our moving average, the 20 EMA, which will ride the trend for us. Then we will wait for a directional move to our area of value. Once the price gets to our area of value, which is the trend line or the moving average, we need to wait to see the reaction of the candlestick and know what the candlestick is going to do. So if the candlestick gets to our area of value and couldn't break past it, rather makes a rejection, we wait for the close of that rejection candlestick, and then we take our set trade. Then we target our 1:2 risk reward ratio, and then we write our trade. So that is how simple it is to trade price action. So this is what I did that generated me over $2,000 in less than 5 hours, and I believe you too can do the same thing. So like I say, go to your demo, backtest this strategy very well, test it on your demo, and then try it on your real account, and I promise you, you are going to be smiling just the way I am smiling. Like I said, this channel is all about forex tutorial. Don't forget to subscribe to this channel to get more information on how to trade the forex market. If you like this video, give us a thumbs up. Don't forget to subscribe to this channel for more tutorials like this, for more educational content like this, and also don't forget to always place your stop loss, because your stop loss is what will protect your capital. Always place your stop loss, very important. Thank you very much. I will see you in my next update. Enjoy the rest of your day.